So despite a banking crisis, the Fed still chose to hike their rates by 25 basis points. To discuss the implication of the Fed's latest rate hike, we are joined by Josua Pardede, who is the chief economist of Bank Permata. Hi, Pa Joshua. Glad to have you with us.
Thanks for having me, Audrey.
So the Fed's rate hike comes despite bank failures, which were partly due to the Fed's rate hikes. What impact will the 25 basis points rate hike have on the banking crisis in the U.S.? What is it currently facing?
So actually, we cannot blame fully on the Fed rate hikes since last year. We know that the Federal Reserve already raised more than 475 basis points already since in the early of 2022. But I think the concern that the Fed rate should be hiked, I think the first reason is because of in order to tame the inflationary pressure in U.S. And already we also note that the SVB failure is not fully because of the Fed rate hikes, because of I think the concentration risk from the funding side and then from the investment to U.S. Treasury that accounts more than 50%. I think that's the problem that should be mitigated by the macro supervision. And I think in terms of the impact, the recent rate hikes, 25 basis point to U.S. banking system, of course, this would be lead to the off-balance sheet securities investment that would be continue to lower, because of the whenever the Federal Reserve raise policy rates, this will lead to the lower U.S. Treasury prices. But I think, as we also already note from the Federal Reserve, FDIC, and even also from the U.S. Secretary Janet Yellen also mentioned that, everything should be, any measures should be taken by the government or the regulators in order to smooth the uncertainty in the U.S. banking sectors. And I think this could be manageable because I think from what perspective, regulator perspective, I think what measures or policy should be taken, I think is already enough. But I think we hope that the condition in the SVB could not be contagious to other banks in U.S. banking sectors.
So from what you've seen, Pa Joshua, do you think that the U.S. government's support and handling the banking crisis, is it doing well? And in your opinion, is the banking crisis contained? Are there still risks of a global contagion, Pa Joshua?
Yes, of course. Again, I think if we look at from the banking sector's perspective in U.S., the securities to deposit ratio tended to be increasing in the last 1 to 2 years. And then this will lead to the declining performance in off-balance sheet and in their portfolio because their holding to U.S. Treasury is pretty much bigger compared to previous years. So I think, so far when there is no bank run, meaning that there is no significant panic from the depositors in the U.S. banking sectors, I think whenever FDIC mentioned that there will be some guarantee for the depositors, I think this will likely manage or contain the contagious effect from SVB. I think because as long as there is no panic withdrawing from the depositors, leading to the realized losses in their U.S. Treasury investment, I think the impact should be manageable.
So, Pa Joshua, just to clarify, so depositors have not had any losses due to the emergency actions that the U.S. government has taken?
As we know that depositors from SVB, for example, they can withdraw their money without any difficulties. And then I think because of the guarantee from the FDIC, it will also manage the panicking condition from the depositor's perspective. And I think, because of the maybe yesterday also Janet Yellen also mentioned that any and measures should be taken by the government itself in order to manage the failure in the U.S. banking system. I think the condition will likely be manageable. Yeah, and I think the transmission or the contagious effect from the SVB to Indonesian banking sectors also seem to be marginal or limited. Yeah, because our deposits in the banking system seem to be more diversified, and then our banking sector's investment to U.S. Treasury seem to be very limited, and then the investment to Indonesia government also is also diversified, and most likely is dominated by short to medium period time. So I think the exposure risk seem to be marginal to Indonesia currently.
So for Indonesian banks, Pak Joshua, do you see that there is going to be an impact in the banking industry?
Yeah, so far I think from Bank Indonesia perspective, in the latest BI meeting, the governor of Bank Indonesia also mentioned that I think the liquidity condition in the Indonesia banking sector currently is considerably ample, and then the capital adequacy ratio, the credit growth, the NPL risk also seem to be manageable. So I think, and then in terms of the micro supervision prudentials also, OJK also continue to monitor the condition in each bank in Indonesia. So I think we believe that the contagious effect to Indonesia banking sectors seem to be limited, yeah, because of our strong condition and then the solid condition also in the banking sectors.
So, Pak Joshua, also I wanted to ask, today the technology stocks in Indonesia also rebounded because of the interest rate being maintained at 25 basis points. What are your thoughts on that?
Yes, of course. I think from the market perspective, because in the previous 2 days we had a public holiday, so I think during the holiday, I think we saw that the dollar tended to be weakening against major currencies and also Asian currencies. So I think the risk-on impact, yeah, during the holiday, I think took place yesterday, yeah, because rupiah appreciates and also GCI also appreciate, including the technological stocks, and also most sector stocks, I think, appreciate this today, and then followed also by the downtrend in the ideal government bond yield. So I think it shows that the foreign investors or investors overall, yeah, continue to buy stocks, Indonesia stocks, and also Indonesia bond today. So I still believe that because of yes, of course, because of even though Fed raised 25 basis point, but the tone, I think, as you mentioned earlier, I think the Fed lowered the tone from the more hawkish, yeah, in the last couple months, couple weeks, yeah, ahead of the Parliament. I think yesterday the Fed mentioned the tone seemed to be more less hawkish, yeah, or more dovish. So I think the positive sentiment currently still dominated in the Indonesia market, but I think we still need to be cautious because the uncertainty in the U.S. banking system that could be contagious to global banking condition. I think this will lead to the uncertainty again. Yeah, but I think Bank Indonesia still I think looking to the latest BI meeting. BI decided to maintain policy rate. It means that the inflation expectation and rupiah exchange rate will likely be manageable, yeah, by the end of this year. Yeah, so I think this will lead to the more positive sentiment to the domestic market.
Right. So, but as you mentioned, the U.S. Currency is weakening. How do you think this will affect the rupiah in the next coming weeks or even the coming days? By Joshua.
Yeah. I think in the short term, I think in the next couple of days, I think when dollar index seem to be under pressure, yeah, I think rupiah could still be managed within range 15,100 and then 15,250. But when there is a risk of sentiment, yeah, emerge during U.S. session today, for example, yeah, this will lead to of course weaker, limited weaker rupiah, yeah, in the beginning of next week, yeah. But we still believe that fundamental factors that still dominate, yeah, market expectation currently. So we hope that there will be no depreciation, yeah, significant depreciation or significant weakening in rupiah, yeah. But we're still expecting that by the end of this year, rupiah will be manageable between 15,100 until 15,300.
Pak Joshua, you also mentioned that there is optimism in Indonesia with, the interest rate staying the same. So with that and the Fed potentially softening their rate hike stance in the coming future, do you think we could see more capital inflow into emerging markets like Indonesia?
Yes, of course. I think in terms of bond market, yeah, domestic bond market, we saw last year foreign investors book net sell, yeah, in our in domestic bonds, and then considering or taking into account that the Fed will likely maintain policy rate after, for example, like raising another 25 basis point, and will consider also to cut interest rate in the next years in 2024, considering the U.S. inflation also will be manageable, yeah, within the Fed target. I think this would be a positive sentiment for the bond market, and we can see from the foreign flows to the bond market. I think the foreign flows in bond market currently is higher compared to foreign flows in stocks market. But we still expect that the stock market, Indonesia stock market also seem to be attractive, yeah, compared to peers, because this year, yeah, Indonesia GDP growth still expected to grow likely around 5%, yeah. So I think amidst global slowdown, yeah, Indonesia GDP still lucrative, and then this will lead to the attractive corporate earnings, and this will lead also to the foreign flows to the stocks market. Yeah, but I think we have to be neutralized with the condition that after the reopening of China and then Hong Kong, this also will lead to the more foreign investors more overweight to China and Hong Kong stocks. Yeah, but I think Indonesia stocks market still lucrative in terms of the corporate earnings because of the commodity stocks, and also FMCG, I think still doing good this year.